Philip, a really awesome report you guys have out about all that's happened and a little bit of insight into maybe what's to come. But let's first compare this year to others. How are we looking at the action? Is it as voluminous? Is it dollar amounts? How does it compare?
Well, good morning, and thanks for having me. So I think for the most part, activity in the U.S. went down sort of in line with sort of global figures. I think, we've sort of caught up. I'm not sure if it's sort of in a summer slump, but in terms of deal value, we're actually year to date on pretty much on track to, actually having a small increase as compared to last year. But the third quarter did see a bit of a decline, especially when compared to 3Q 2018. So I think that's definitely indicative of an overall slowdown falling in line with global trends.
Now, this is interesting, that kind of risk-taking and willingness to go out on a limb to do deals happening around the same time as concerns about the economy build. That being said, the deals we've had this year, $838 million is the average deal size between 1Q and 3Q. That's the highest you guys have on record.
Yeah, it is. And it's definitely, something to acknowledge. I think that the giant mega deals that have sort of been coming in have definitely skewed the numbers a lot.
Right.
But for the most part, those are sort of in the average disclosed deals. You have, a large number of deals, from 2018 into 2019, you have a lot of mega deals sort of being announced, and, that's definitely driving the figures up.
What, in your research and the kind of nature of the narrative behind this, when do these big mega deals happen? I mean, is it symbolic of anything in the economy? Are big companies having to revisit their growth prospects? Are they having to really dig in and make kind of risky purchases to tack on growth?
Yeah, I would say it's a combination of sort of a lot of things, as, companies sort of reevaluate how they should go forward in their businesses. If you look at sort of Celgene and Bristol Myers Squibb, that has resulted in a very large sort of portfolio of businesses.
Yeah.
And sort of drugs within the space. And sorry about that. And so that created a very comprehensive sort of portfolio of drugs that that the new company will have, and with that we saw sort of Celgene sort of sell their their Otezla business to Amgen, late in the third quarter, and that was sort of a spinoff of that sort of Celgene Bristol Myers Squibb merger.
Now, at $101, we're looking at the chart of Celgene right now. We're just looking at your guys' breakdown. The nature of pharma as a whole, I think, is really impressive, right? 137% is the increase in deal value for pharma, medical, and biotech compared to the same period a year ago, right? This is a huge surge that we've seen.
Yeah, and I think, it's somewhat to be expected. I think that a lot of pharma companies are looking to sort of expand their own portfolios. If not, you see a lot of the specialties, pharma companies that sort of specialize in a certain type of drug or certain type of drug treatment. They're sort of either getting acquired by some of the other bigger names or, even within private equity.
You have a quote here I think that's pretty interesting as we look forward on what comes next. Amid sluggish global economic growth, Federal Reserve rate cuts, and already historically low interest rate conditions, despite strong year to date, the third quarter saw the slowdown. So to come back to right now, what are we looking at as the potential catalyst to restart some of these, or is there a degree of kind of fear seeping into the deal makers in this market?
Yeah, I think a lot of what is sort of underlying these sort of deflated numbers is the amount of uncertainty that is in the market. Just in the U.S., you have like this sort of trade war sort of impending, and you just don't know where it's going to go. So I think once a lot of that uncertainty clears up, that will sort of pave the way for more transactions to go through.
Yeah, you mentioned the nature of kind of the unknowns on the geopolitical front. Your guys' chart for sector breakdowns shows energy, mining, utility deals have decreased compared to last year. Business services also have decreased. Thoughts on maybe some of the other areas that we're starting to see some more activity in? Banks, we saw BBT SunTrust. Where is there in your mind maybe some kind of umph left? Where is there some M&A activity that might still be in the works?
Yeah, I mean, I think we've definitely seen a sort of active private equity market, and for them, they're sort of, involved in a sort of number of sectors. In that sort of, energy mining utility space, I think, that's highly dependent on sort of oil prices. Technology, I think, is something that we're going to start to see a lot of. The deal values in the technology space is just, really gotten up there. And I think for the most part, we can continue to see technology deals come through.
The business services component sector-wide, is that the tech that we're talking about? Is that sort of like software, enterprise tech? I mean, are we going to see some of these smaller startups get gobbled up by the big boys in the room?
Yeah, I mean, I think there's a lot of space to sort of make acquisitions within business services, whether that is in sort of cybersecurity, business to business sort of companies like that. But I do sort of see, the numbers were slightly, fudged by the sort of Refinitiv LSA deal. That's definitely something where, it has a tech angle in it, but for the most part, it's in a sort of data company. And I think, data is definitely something that is driving a lot of deals. We saw Tableau get acquired. So yeah, I think that you're going to see a mix of this sort of like larger corporates in the space making acquisitions, and whether that's in, business services, whether that's in cybersecurity, I think those will be the sort of companies driving deal activity.